Good morning. Market movers for Monday, September 16th. Pretty interesting development over the weekend. Larry Summers, who was really Obama's first choice for replacing Bernanke at the Fed, has withdrawn his name after realizing how contentious it would have been to try to get approved through Congress for that position. Basically, he's a very controversial figure. I actually wrote an article about it, which was published today in Newshawk, NOOZHAWK.com. If you're interested, go there, check it out. But he's had a checkered background, to say the least. Lots of problems with controversial decisions, we should say, about derivatives, about deregulating the banking industry, and a lot of other stuff he did while he was president of Harvard and other things. So it's being seen by the market as a positive that he's out, primarily not only because he's controversial, but also because Janet Yellen, who is now the front runner, is vice chair currently under Bernanke, and she has very similar that it'd be business as usual and policy would not really change a whole lot. And that stability is a positive for the market typically, and it's being seen that way today. Probably more so that Larry Summers will not be replacing Bernanke rather than she will be. But we're up about 150 points on the Dow, above 1700 on the S&P 500, so very close, within 10 points of the 1710 all-time high close for the S&P. I talked about this a little bit before in terms of having an orderly correction, if you will, that we had 4 or 5% drop in the market overall, but it was very orderly. And typically what we've seen, historically speaking, is that whenever it's a kind of an orderly downturn in the market, investors see it as nothing more than a buying opportunity. It doesn't scare them in any way, and they tend to buy the market right back up. And that's exactly what we've seen over the last couple weeks. Markets dipped about 4 or 5%, and now we're within a few points of the all-time high yet again. So in my opinion, if you haven't sold already, now is the time to raise cash. I would definitely recommend that. I am recommending that, and I'm doing that for portfolios that I make. Go higher, sure it can. It can always go higher, but it can go lower as well. And from this point, the upside opportunity from above 1700 on the S&P 500, at least in the short to intermediate term, I just don't see it. I don't see a lot of upside. Valuations are very expensive. Too many problems. The Fed meets this week, obviously, and they'll discuss tapering. We could see tapering happen. Market doesn't seem to care. The bond market does. We've seen yields going up, but the stock market doesn't seem concerned about that right now. But the reality is pulling the Fed buying program or slowing it down is definitely going to hurt the economy because it's going to allow rates to rise and it's going to take liquidity out of the economy. So a lot of things going on there, a lot of reasons to be concerned. And for me, the upside versus the downside here doesn't look very attractive. I'd rather be in cash. I'd rather wait for lower levels. We just saw a 4 or 5% correction in a very short time frame from the previous high, August 2nd, on the S&P 500, where we hit 1710. We did drop 4 or 5% from there, which isn't a big deal when you're that high, but 4 or 5% is 4 or 5%. There have been a lot of years where the S&P 500 hasn't even gained 5% in an entire year. So a drop of 4 or 5% is significant, although I'm looking for a lot more than that. But again, my opinion, raise cash here. I think it's a gift that the market ran back up. So for those investors out there who didn't have an opportunity to sell or weren't quite convinced that they should be a seller, I think now is a fantastic opportunity, especially given that we're looking at September-October time period, which is historically the worst time of year for stocks. Fed's probably going to start tapering, could be as soon as this week they can announce it, but definitely before the end of the year. Syria, you name it, we've got lots of problems, high unemployment, we can go down the list, but the reality is markets are very high in the future. That's it for today. Market movers for Monday, September 16th.